What's going on? What's going on, team? Welcome back to another video. Welcome back to the channel. My name is Xander with Fates Trading Academy. Today, what we'll be doing is we'll be taking a look at the SPY, the S&P 500. We'll also be taking a look at the NASDAQ, and then we'll also jump into some of the opportunities that are being presented within the market, especially now that we're seeing such a big pullback. So let's go ahead and jump into the S&P 500, which we're looking at SPY right now, SPY. So if we look back at, even a year or back to January, right, we see that we've been trading within this channel here. And so we've been holding this trend line and this channel all the way up until just recently. So just yesterday, well, not yesterday, but Friday. And then today we ended up breaking below this channel, which we usually bounce at, right? So that's the first thing. Obviously, it's not ideal. We would have preferred it to bounce here just because we would have known that, obviously we will most likely see a recovery. The only thing that we're having some trouble with right now is the fact that we just don't know how the Fed meeting is going to go. And that starts tomorrow and it's going to go through Wednesday, right? So that being said, we have to pay attention to that. We have to see how the policy goes, what they discuss, what their answers are going to be, what they want us to focus on, right? And that's really going to dictate whether we're going to end up seeing a bigger correction happen or if we're going to end up seeing a recovery to at least those previous levels, right? So that's the first thing you want to be paying attention to. So pay attention to the meeting tomorrow and on Wednesday. And then from a technical standpoint, obviously we did break this bottom trend line, which is not a very positive sign, but the positive sign is we didn't quite come down to the support line, but it looks like we did end up finding some form of support right here about halfway through Monday. And then we ended up starting to see a recovery. That's not to say that this is going to continue, right? It really just depends on what happens tomorrow and on Wednesday. However, from the looks of it, it looks like we might begin to start a recovery either Tuesday or Wednesday or sometime this week, if not next week, right? That's just a thesis, right? It could definitely continue to sell off. So be prepared for both situations. But just make sure that you're paying attention to it and paying attention to this blue EMA line, right? If we end up breaking through this blue EMA line, we are most likely going to start seeing a recovery. That EMA line lines up here with the support line, right? Which is now a resistance technically, and obviously also this bottom trend line, right? So if we end up bouncing back, we did end up seeing a bigger correction than, we probably expected. However, if we do end up seeing a break through this blue line, we're most likely going to start recovering, if not putting in all-time highs again, right? So that's what's going on with the SPY. It's definitely positive that we're starting to see some form of recovery happening already on Monday. And if we're paying attention to the RSI, we also see that we were very, very oversold. So it's not surprising that we're starting to see recovery. We're starting to see a change of color here from red to orange on the MACD, which is indicating, the fact that we are potentially going to start a recovery as well. So we've got all these things lining up, and it all really just comes down to how that meeting is going to go tomorrow and on Wednesday, right? So pay attention to the meeting. Depending on what is said and what decisions are made there is really what's going to dictate which way the market's going to go. So at this point, even though we do see a bit of a recovery happening, it's not guaranteed, right? But that being said, we do want to be prepared. So we want to be paying attention to the stocks and the opportunities that are being presented, which is what we're going to talk about a little bit later in this video. So that's what's going on with the SPY. Taking a look at the NASDAQ, that's going to be /NQ. So very, very similar to what we saw in the SPY, right? We ended up seeing some consolidation, and then we ended up seeing a pullback. Very, very similar, right? So nothing surprising here. Obviously, it does look like we might be lining up a little bit with this support level right here. However, just like on the SPY, it doesn't come down exactly. So, we'll see. And it's all just going to go hand in hand with, like I said, depending on what happens tomorrow and on Wednesday. Looking back at the SPY again for one quick second. When we were up here at the 454 level, if you look back at some of the stock talks previously, we ended up talking about this consolidation period, right? And when we were at this consolidation period, we did just recover from a correction, a pullback. So, that consolidation period happened fairly quickly, relatively, right? So we weren't really, expecting it to correct just this quick. However, it's not surprising to see this happen at all. And we talked about the potential of it potentially correcting as well, just because we did end up seeing a lot of consolidation and we weren't really pushing higher like we were all the other times, right? So that's kind of, we did expect this to happen. We did see this coming. It's just nobody really knows when it's going to happen. So that's why you want to pay attention to your EMA, right? If we ended up seeing a break through the EMA, which we ended up doing, we just saw a sell-off happening. Every time that happens, we do see a sell-off. So pay attention to that. And on the reverse side, pay attention to the break above the EMA, and that's going to indicate a recovery, right? So let's go ahead and jump into some of the stock opportunities that we see for this week. What I like to focus on, especially with these corrections that happen, is I want to focus on quality stocks, quality companies, right, that are guaranteed to recover with the market recovering, right? I don't want to speculate. I want to make sure that, it's a for sure thing, right? So just from the names that we're going to talk about, you're going to realize that these stocks are all strong companies. And they have a strong backing to, if the market's recovering, they're going to recover, right? And it's not so much of a speculation as it is more so of a for sure kind of thing. The first one we're going to take a look at is going to be Apple, AAPL. This one here, very consistent uptrend pattern that we've been seeing. We did well through the earnings. We ended up holding above this 180-day and 200-day moving average. And then once the market started to sell off, we ended up seeing this sell off as well. Every time the market sells off, we do end up seeing a sell off happen here on Apple. So you're going to see this pattern trend across the board with a lot of the stocks that we're going to be talking about. When the market sells off, these stocks sell off. When the market recovers, these stocks recover as well. We ended up pulling back down to the support line right here, 141. Very oversold here on the RSI, MACD, starting to change color, similar to what we're seeing on the SPY. So, I wouldn't be surprised to see this thing pop right back up. We're going to be looking for that first level to hit that 180-day mark, which is going to bring us up to about 5% here on Apple. Very consistent, strong company. If you're trying not to worry about, how your investment's going to do or how your trade is going to do, I suggest focusing on blue chip stocks, high quality companies, right? So Apple, that's the one we're looking at. These are going to be very self-explanatory just because the market pulled back. So a lot of these stocks pulled back. There isn't too much to say. Pay attention to what's happening with the overall market and just follow along with these stocks as well. They're going to perform pretty much the same exact way. So pulled back with the market. Now we're starting to see a recovery. We started seeing halfway through the day, we started seeing a recovery on the SPY. Same thing that we're starting to see here on Apple, right? Halfway through the day, we began to recover. So pay attention to Apple. That's the first name that we're looking at. The next three names are going to be all financial stocks, right? BAC. We look at these almost every single time the markets pull back. We really like these because they do very, very well on the recovery, right? As well as, if the market's trending up, they're trending up. If the market's trending down, they're trending down, right? So this is Bank of America Corporation, right? We ended up seeing, the market pulling back all last week. We saw this pullback happen. We ended up pulling back down to the support level. And once again, halfway through the day, we saw halfway red, halfway green, starting a recovery, right? So paying attention to BAC. The other two names are very, very similar. The second one is going to be USB. Very similar situation. We've been, pretty much consolidating here on this one. We had highs of 62, but this one, if we do end up seeing that recovery, which we ended up seeing halfway through the day, recover up to 62, we're looking at about 14% profit potential. So definitely has a lot of potential. And considering that we are pretty much at this bottom support level here, and we're starting to see the market recover, and we're starting to see this recover. Once again, halfway through the day, we ended up seeing red, and then halfway through the day, we ended up seeing green when the market was recovering. Very attractive opportunity. The next one's going to be BK, also a bank stock, right? So this one is Bank of New York. This one we have seen a little bit of recovery begin. However, we, are just waiting for what happens with the overall market, right? So this one here, we ended up pulling back. As long as the market was pulling back, this was pulling back. We found support here at the support level here at 49.12. And we are looking like if we do recover back to not even all-time highs, let's go back to this level over here. We're looking at about 10.5%. All-time highs, we're looking at about 13.5%. So definitely attractive opportunities here. They're very consistent. If you look at the historic pattern on these stocks, just consistent uptrend pattern, right? We saw a little bit of a dip happening here when the market was dipping, and then we ended up seeing recovery. Market's dipping, and when the market's going to begin to recover, we're going to see a recovery in these as well. So those are some of the bank stocks that we're talking about. The next one's going to be an ETF. Actually, this is a triple leverage. So if you are new to trading, take this with a little bit of caution. Okay, so when the overall market drops, TQQQ drops as well, right? And when the overall market recovers, so does this, right? Every time we saw a dip in the market, this dipped as well. Market began to recover, this recovered as well. Saw a dip in the market, market began to recover. We're starting to see a recovery here as well, right? Same situation as most of these stocks are going to be. RSI is oversold, MACD starting to change color, and what we're looking at here to those all-time highs, full recovery, we're looking about 13.4% if we do make a full recovery here. So once again, this is a triple leverage, so don't hold this one necessarily overnight. And I would only encourage you to only take action on this when you begin to see a guaranteed recovery, right? As of right now, we're kind of in limp mode. We're waiting for what happens at the meeting to really dictate the future of where this direction is going to go. So don't jump into this one and then hope that it goes up. Wait for the market to begin to recover. Wait for that positive news to come out from the meeting if it does come out. And then once we get all of those confirmations, then you can jump into it. You're not going to get your full 13%, but you can definitely, if we jump in when we see the break of the EMA, you can definitely lock in approximately 9.3. So you have nothing but time, and stay patient and stay discipline, right? So the next one that we're going to look at is going to be Facebook. This one very, very similar to Apple, right? Follows the market very closely. We ended up seeing a huge dip happen here with the market selling off. We ended up finding support here at 350, and then we began to start a recovery when the market began to recover halfway through the day. Oversold, MACD's changing color. Once again, we are waiting for confirmation, right? We don't have a full confirmation of a reversal just yet. So when we do get that full confirmation from the EMA line to those all-time highs that we saw, we're looking about 5.52%. And that's just if you're jumping in at the EMA break, right? So as of from current price points to those all-time highs, if you're looking for something more long-term, this might be a great opportunity for you to consider that this might be a good choice to make, right? 7.79%. And that's just a return to where we were previously before the market sold off, right? The next one we're going to look at is UPRO. This one we have been trading for some time now here with the team. This one follows the market very, very closely as well. Ended up seeing a pullback all last week. We ended up pulling back on this as well. Every time we saw a market pullback, we ended up seeing this pullback, and it ended up bouncing at that 180-day. Came down, bounced at 180-day. This one, obviously, we broke that trend line that we were in on the SPY. So this one definitely broke that 180-day, but that just gives us more margin and more room for a recovery. We're looking at about 11.95, approximately 12% here on this one. So pay attention to this one, UPRO, great opportunity as well. The next one that we're going to look at is going to be DKNG. DraftKings. So we ended up seeing a pullback with this, again, with the market pulling back. We ended up seeing, if we pay attention to how this has been trading, we have been trading above the 180-day moving average basically since August. So since August, we've been trading above the 180-day moving average. Today, well, over the last week, we ended up pulling back right down to this 180-day moving average. We also have a support here at 55.89. And if the market begins to recover, I anticipate this one will also begin to recover. It's not as consistent as Apple or Facebook or some of those bigger brand names. However, this one is definitely, you know, a great opportunity from current price points. If we're looking to that resistance that we were at, we're looking at about 11.76%. And once again, we have a lot of reason to find some support here. We have this support level, or we have this support line and level, and we also have that 180-day, 200-day moving averages. We are oversold. We haven't seen the change of color here on the MACD yet, so I would remain a little bit more patient with this one until we begin to see change of color here. But until then, you know, just one to keep on your radar and pay attention to. The next one that we're going to be taking a look at is going to be CAT, C-A-T. This is Caterpillar. This one has been selling off for some time, basically since June. We have been seeing a little bit of selling, and then we ended up seeing some consolidation. However, the reason that, you know, we've been consolidating in this general area for some time, but then obviously with the market sell-off, we ended up seeing a huge sell-off happen here. Obviously, there's some things going on in China with real estate companies, so that could be a beneficial thing for Caterpillar. So that's something positive. Once again, we saw the market recover, and we saw some recovering happening here halfway through the day. So pay attention. If the market begins to recover, we can definitely anticipate to recover at least to these levels over here. We're looking at about, if we come back down to that lower level that we were, finding support at, we're looking at about 4.5%. If we return to pre-market sell-off levels, we're looking at about 8.53%, right? So both of these very, very attractive and very, very interesting. MACD is changing color here, and so is the RSI. It's very, very oversold as well. So pay attention to that one as well. The next one we're going to take a look at is going to be Visa. This one has been selling off for some time, but Visa is a very, very strong company. This is a more of a long-term play if you're looking for something long-term. However, I strongly believe that when the market begins to recover, this is definitely going to recover as well. It has been selling off a little bit before the market was selling off. However, we're looking at 252.67 as all-time highs, and we're sitting at 220 basically. We're at 219.93. So from current price points to those all-time high levels, we're looking about 12.13%. So that one's very attractive as well. We are starting to see a change of color, and we're also fairly oversold here. Like I said, this is more of a longer term play, so you can do this more of a swing trade, but definitely a great opportunity, especially with the market pulled back so much. The next one we're going to be looking at is UAA. This one's Under Armour. Market was selling off. We ended up seeing a lot of selling happening here. That's not to say that we can't continue to see lower levels. However, it looks like we are here at this crucial volume profile level, right? This level that, we're starting to drop off a little bit after that when we get lower, right? And we usually find support down here anyways. However, that being said, this is a fairly strong support level. If we're looking at historically, we had support down here, we had support down here. And so that's basically where we're at price wise right now as well. And it looks like we are starting to find support. So if the market begins to recover, I can anticipate this to recover as well. Probably looking at something along the lines of, 180-day, that would be probably where I'd start considering to take profit once I am exiting this position. We're looking at about 10.12% on this one. So also a very attractive opportunity. And Under Armour is a very strong company. So I wouldn't be stressing about it too much. The next one that I'd be looking at is Sbux, SBUX. This one has been doing very well over basically the span of this entire year. And we had a little bit of consolidation happening here, and then the market obviously began to sell off. So we saw some selling happening here. We haven't seen these lower levels since basically May and June of this year. So there's been a couple of months since we've seen the price point that we're at right now. So this does become very attractive. We are at a crucial volume profile level as well on this one. It looks like we are starting to turn around here on the MACD, changing color. MAC or RSI is looking very oversold. And so from current price points to, let's say, that resistance level, the up top that we'd be looking at, we're looking at about 6.97%. For Sbux, I think this is a great deal. So, if you're considering it, make sure to wait for confirmation and obviously take advantage of this opportunity. The next one that we're going to be looking at is PayPal, PYPL. This one, very, very similar. We have been trading in this horizontal pattern. And so basically we're at this bottom level right here of this trend, right? And last month basically is the last time we saw this price point. So we found support at that point as well. And we ended up recovering to approximately $299, almost $300. So let's say from current price points, we recover to that $300 mark. We're looking at about 10.86%. All-time highs, we're looking at about 15.74%. PayPal, if you don't know what PayPal is, you should know by now. It's a very strong company as well. They're probably not going to be going anywhere anytime soon as well. So, if you've been looking for a chance or for the proper time to invest in something like PayPal, this is presenting a great opportunity. And I can almost guarantee that when the market begins to recover, this is also going to start recovering with it. So the next one that we're going to take a look at is going to be Amazon. This one is a little bit more so along the lines of Apple and Facebook. So very, very consistent, strong company. Obviously, we've had a little bit of turbulence, but overall, it's been doing very well this year. And so if we're taking a look at where we're at from a technical standpoint, we haven't started seeing a change of color just yet. However, we are at this support level. We began to recover with the overall market. So from current price points to where we were before we saw that sell off, we're looking at about 5%, and 5% for a stable company is very, very well. The next one that we're going to be taking a look at is Dropbox Dbx. This one here has been very, very consistent, a consistent uptrend pattern that we've been seeing over the entire year. And then we ended up seeing this pullback happen with the market. We are, still in the red, I would say, based on the MACD. We haven't quite seen the change of color. So I'd stay a little bit more patient with this one than with all the other ones. This one's probably going to begin to recover a little bit later after the entire market begins to recover. It's going to kind of lag a little bit, I'm assuming. So this one from current price points, we're looking to 33. We're looking about 9.52%. Very oversold on the RSI, MACD. Obviously, like I said, haven't seen a change of color just yet. So with this one, I'd be paying attention to this blue EMA line. And once we see that break on that blue EMA line, that's when I would consider this as a potential opportunity. Until then, I'd stay patient with this one. However, definitely one to consider. The next one is COM, COMM. This one here, we ended up actually watching this one basically since we saw that drop after earnings, right? And so this just becomes more and more attractive just because we haven't seen these price points since basically March, right? So at this point, it was a great deal. We ended up seeing that recovery right after we saw earnings drop. We ended up seeing that recovery. We had approximately 11.67% on that recovery. And then we ended up seeing the whole market sell off. So it didn't even get a chance to fully recover, right? So this one, once again, this one sold off a little lower than we were pre-earnings or after earnings. So in my book, I believe that this is still a great deal. Oversold here on the RSI, MACD. We're obviously seeing a little bit of red, but this one, like I said, this one's probably going to kind of lag a little bit as well, right when we start seeing that recovery. So pay attention to this one. From current price points to those all-time highs that we were at, we're looking at about a 59 to 60% return, right? So this is very, very attractive. We ended up seeing, like I said, we saw that 11 point something percent. I believe it was like 11.6% after earnings. We've talked about this one with the team. We've talked about this one in some of my previous weekly stock talks. So if you go back, you can see that we talked about this when we saw this happen after earnings. So once again, this is just another opportunity. Once again, pay attention to the MACD, or not the MACD, but the EMA, the blue line. Wait for that confirmation to break above it. Really, you're not going to miss out on too much. Even if you get in at this lower trend line, after you get full confirmation, you're still, looking at 11.68% before we hit that resistance where we ended up selling off from earlier, right? So you're still looking at a great return. So, this is more so of a big picture kind of swing play if you're really trying to jump into something that's going to obviously it might move quick, might move a little slower, but you have time to wait. So this is one play to consider for that. The next one that we're going to look at is IRM, Iron Mountain Inc. So this one here, we have seen consistent uptrend all year long. Historically, every time we came down to that 180-day, we recovered, came down, recovered, came down, recovered, and now we're back at this 180-day, a little bit lower, obviously, because of the whole overall market selling off. However, from the RSI, we're very, very oversold. So it's very attractive. And the MACD, it looks like we are just about to begin that recovery. So from current price points, if we recover to those all-time high levels, we are looking at approximately 11.48%. Once again, another great opportunity to take advantage of and consider. The next one that we're going to look at is going to be Google, GOOG. Amazon, this is along the lines of Amazon, Facebook, Apple, right? So this is very consistent uptrend pattern all year long. We ended up seeing pullbacks with the market pulling back and recoveries with the market recovering. We ended up pulling back here down to the 180-day moving average, right? And the 200-day moving average. So from current price points to those all-time highs, we're looking at about 6.25%. Like I said, the margin on these blue chip stocks isn't as great, but they are very consistent. So remember that. Oversold on the RSI, MACD starting to see a change of color. Overall, if the market begins to recover, this is definitely going to continue to recover. So if you were ever trying to get a deal on Google, this is the time. The next one is going to be Urban, URBN. So Urban Outfitters. This one has been trading fairly sideways for some time now. But then we ended up seeing this pullback happen here that we ended up seeing just with the market selling off, right? And so when the market began to recover, we ended up seeing some great recovery actually happening today. It looks like we are trying to push through this 50-day moving average. We've tried it before, we got rejected. We're trying again. We'll see, depending on how the market does. If the market begins to recover, I have faith that this is definitely going to break through and continue to recover to higher levels, right? So from current price point, just for us to get back into this range that we were trading in, we're looking at about 5%. If we return all the way back up to that upper trend line that we keep getting rejected with, we're looking about 30%. So definitely another one to consider for when you start seeing in the market recover and you want to jump in on something. The next one is going to be JBL. JBL, once again, very consistent uptrend pattern all year long. Every time we come down, every time market sells off, this sells off, and we end up bouncing when the market begins to recover. Usually happens around the 180-day, 200-day moving average. And so that's basically what we're at right now again. So we had the sell-off happen, recovered, sell-off happen, and so now we're waiting for that recovery. Oversold here on the MACD or RSI. MACD starting to change color. Be aware there is earnings coming up on the 29th for this stock. So just keep that in mind. But every time, like I said, every time we come down to this 180-day moving average, we recover. Came down to the 180-day, recovered. Came down, recovered. And so we're basically in that same exact situation right now. That being said, like I said, consider the earnings coming up and pay attention to the overall market. And that's what's really going to dictate what's going to happen with this price. But I really like this one just because of the consistency, very predictable, very easy to understand. We're looking at about a 7.7% profit potential here on this one, JBL. The last two that we're going to take a look at is going to be Fiverr, FVRR. So Fiverr, we talked about also a few weeks ago when we were talking about COM. We ended up pulling back after earnings. We ended up talking about this and made a pretty awesome recovery, 23.48% recovered. And so here at this point, I'm just, being a little cautious just because we are approaching the 180-day moving average and the overall market is selling off. So just be cautious with this one. If you did jump in on this when we talked about it initially after earnings, I would consider locking in your profits. And then if we do consider, or if we do continue to see a market recovering, I would expect this to continue to recover at least to this next resistance level, which is another 16.5%. But if the market continues to stay weak and we continue to correct, I wouldn't be surprised to see this potentially even come back down to the support level that we were at. And the last one that I want to talk about is going to be GoPro, GPRO. So this one here has been trading sideways. We ended up seeing the market pulling back, and so did this one, right? And we ended up seeing, once again, halfway through the day, market was selling off. We were selling off. Halfway through the day, the market began to recover, and so did this one. So from current price points, the reason I'm paying attention to this one is obviously we have been trading in this sideways channel for some time. So if we're looking from current price points to that upper trend line, we're looking about 14.5%. If we return to those highs that we were at, those aren't even all-time highs, but that level of 1240, we were at that level in June. So if we return to that level, we're looking about 30%. Obviously, your risk is just right here under $9. So, obviously you check out what your risk reward ratio is for you. However, in my opinion, this is a very, very attractive opportunity. So that's it, guys, for this week. Hopefully you can pick and choose which stocks you see value in out of the ones that we just talked about. I find that all of these present a very, very attractive opportunity. So make sure to add them to your watch list if they're not on your watch list. And I hope that you guys take advantage of these opportunities. And, when the recovery happens, you are able to turn a profit on them. That should be it for this week, guys. And I'll talk to you guys next week.